Thanks to the popularity of index funds, it seems as though all we have to do when it comes to investing is buy index funds and let it be. And that's great. But there are other investment strategies that we could use to maximize our investment monies. It starts off first with knowing what your financial goal is. For a lot of us, it's to supplement our social security income if it's still there. And for some of us, it's also to pay for the kids' education, which is maybe 10, 18 years from now. Either way, you need to know what your financial goal is because that also helps you determine how much risk you are willing to take. Of course, no investment is without risk, but some items are a lot riskier than the other. Investing in single stocks and crypto is a lot more riskier than investing in bonds and CDs. Knowing how much time I have before I need this money definitely helps me determine what I want to invest in and when I want to invest in them. There are two very easy investment strategies. One of them most of us already do, and that is investing through your employer. And this is very straightforward. You don't have to do any thinking, you don't have to do any planning. All you have to do is provide the money via your paycheck. You never even see that money, it just goes out before you get your paycheck. We all do that. Another easy strategy is to go via robo advisors. These are softwares that will do the planning for you. All you have to do is indicate how much risk you're willing to take and what your financial goal is, like we just discussed, and it will do the planning for you. It will spread your money where it feels best to hit your goals, your financial goal, and with your risk in mind. Now, keep in mind with robo advisors, a lot of times because you're young, it automatically just assumes you're willing to take all this risk. You know, you have 40 years to put this money in. So you may still want to watch that and manipulate that so that if you're not willing to have, say, 90% of your money in risky options. Now, a few of these robo advisors, and none of this is sponsored, is Wealthfront. Investopedia calls it the best overall robo advisor. There's Betterment. Forbes considers them to be the best robo advisor for everyday hustlers. There's Vanguard Digital Advisor, and this is considered to be the best robo advisor for beginners. You could either go these two routes where you're not doing a lot of thinking at all, you're just providing the money and it does the work for you, or you can go ahead and do the investing on your own by opening a brokerage account. I'm not going to go into details on how to do that because I've already discussed that in this video. So when you're done with learning the strategies, the different strategies for investing, you go ahead and watch that video on how to open up an account. All right, let's proceed with the other strategies. There's the dollar cost averaging. That is investing the exact same amount of money at regular intervals over a certain period of time, regardless of price. You set a specific amount that you want invested every month, every 2 weeks, and that amount, regardless of how the market is doing, will be invested for you. Because you consistently invest in the same amount of money over a period of time, you end up decreasing your average cost per share. When market is up, you're buying the same amount. When market is low, you're buying the same amount. So in some cases, you're buying a lot, and in some cases, not that much, but ends up giving you the average. The con to doing this is you always have to have that money available to invest at each interval, right? If you've set out 500 to invest every month, you must have 500. I mean, that goes without saying. But the other con is this is very passive investing. So it may not be the most strategic when it comes to investing because you invest in regardless. When market is down, you're buying. When it's super high, you're buying. Whereas someone who is more actively involved in it and paying attention to the market may know, you know what, this is way inflated. The market is way too expensive for my taste. But at the end of the day, that's the benefit of this strategy is be it high or low, you will constantly invest in, and in the long run, you average out when it comes to cost to you. Growth investing. This is buying shares of companies, of emerging companies, buying and holding shares of companies you believe have potential to grow above average rate. These are companies that usually have a unique product or unique service. And so you believe in not so distant future, their value is going to skyrocket. You know, a lot of them are usually tech companies, but they're not limited to tech companies. Anyone thinking Nvidia? I hope that's the right pronunciation. I don't even know the right pronunciation, but I know that company because my eyes are on them. CRFA, one of the largest independent research firm, has them listed as one of the top growth stocks for 2024. Now, growth investing, as great as it is also very high risk. As you can tell, you are investing with a mindset that this company has a potential to, blow up. But what happens when they don't? Value investing. With this strategy, you are buying stocks that are undervalued. Unlike growth investing, where you're buying stocks for emerging companies or companies that you believe they'll soon shoot up, in this case, these companies are most of the time already around for a bit, but right now they're not the hottest thing to buy, But based on their service, based on their leadership, based on the product they have, you understand it hasn't hit its full potential. For instance, say I'm just going to use Fashion X as an example. A fashion house. This isn't they tanked. They did horribly, right? And so their stocks is down. But based on your previous performance, based on where you think the economy is going, how people are going to be dressing, based on your leadership, they will do better in the long run. And so you buy the stocks because the stocks right now are just undervalued because they had a poor season, right? I don't know why I use fashion. That's the easiest example. So with the value investing, it's more of a long-term mindset because you're not going to get your profit right now, but you hold on to it long term, and that fashion house is going to hit their stride because they have good bones. They're like a house. They have good bones, and it's just a little touch up, a little change in the design, and there'll be a hit, right? So you have to hold onto it long term. This is what Warren Buffett does. He preaches this all the time. When people are running away, that's when to buy, of course, making sure they have quality product, quality company. And so you buy, hold onto it. When they get to that right direction, you get your profit. As of March this year, Morningstar, a financial service firm, has Pfizer and Polaris as one of their 10 cheapest value stocks. Income investing. This is building a portfolio that would provide a steady stream of income. The whole goal of this strategy is to invest in products that would end up paying you. A lot of us, when it comes to investing, our mindset is right now we just invest, 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 and then down the road at retirement age, then we start cashing out, right? With this strategy, the whole point is while I'm investing, I'm getting some money out. And eventually, if when you get high enough, it can actually cover your cost of living, right? And in some cases, it parlays into retirement, the transition into retirement, but it doesn't have to wait until retirement. The whole idea is you're buying stocks that ends up paying out as you go, right? So dividend stocks that pay dividends, or great income investing, buying into real estate or REITs. Real estate would be your regular real estate is one of that, buying a property, getting rental income, or even not even when you don't have all that much money to do down payment on a whole different rental property. Investing in REITs, REITs, I call them REITs. And I'll do a video on everything REITs soon. But investing in that and investing in the ones that pay out, or investing in bonds. Bonds are considered income investing because they have a set maturity date, fixed rate of return, and it's very minimal risk. So, at the end of X amount of time, I'm getting X amount of money back in addition to my money. There's also annuities. That's another income investing product. Annuities are payments you make to an insurance company, either periodic payments or a lump sum payment. And then the insurance company would provide guaranteed income stream either right away or in the future. Now, this video is not to dissect if annuities are right or wrong. This video is just giving you the information on investment strategies, and I could do a different video about annuities if you want me to go into that. But right now it's just to let you know the different strategies when it comes to investing. The other investment strategy is one we've already discussed and I've discussed in this video, so I'm not going to go into details with it. But it's passive investing, and that's where you buy index funds and other funds like it, where you don't have to do any thinking. You just buy a product that covers a wide array of the market and let it be. And that way, regardless of how the market does, regardless of how the economy does, if a set of companies are negatively impacted, no big deal because the other set of companies are doing good. And so you average out. That is passive investing. Not a lot of thinking involved there. You're just buying a big basket of several things to cover your behind, regardless of what happens with the economy. And then there's what I call the MLM of investing, that is momentum investing. This is what I'm currently doing with Nvidia. It's getting in at the right time for a short-term gain. So you're riding the wave of momentum. A stock is popular and is shooting up, like crypto. When crypto first started or when it got popular, and people were getting into it. So you jump in just so you can make that gain over that short period of time. Right now, Nvidia has momentum. People are interested. The stock split is coming, and people are interested and willing to buy. I'm jumping in knowing we're going to get some money by now. It may last, it may not, but my focus, what I plan on achieving from it, is this short-term win, because everyone is jumping in right now, and that's why I call it MLM. I'm not saying it's not a valid stock. Disclaimer: I'm not saying Nvidia is not a. That's not what I'm saying. They caught my attention just because I read an article and it mentioned how all the market failed and they were the only ones standing. I'm like, momentum. Of course, this is risky as heck. That is momentum investing. I don't do this all the time. You have to, I don't. I just think the product they offer is great. You can Google it and it's going to be in need. In the long run, it's going to be great. But for me, just the short term gain is enough win, right? All right. And then there's also investing in companies that share the same social and environmental values. You buy stocks, you invest with companies that align with your beliefs. Now, the right portfolio will have a good mix of all the strategies. You want some stocks of emerging companies. You want stocks that are undervalued. You want some tried and true where their history lets you know they may be down right now, but in the long run, we're going to get our value. You want some minimal risk, like the bonds. You want some dividends, so you're actually getting some of your money back, right? So a good portfolio would have a good mix. When it comes to investing, the more diverse you are, the less likely you are to lose a lot of money. Now, with investing, you gain some, you lose some, right? But when you're more diverse with different products from different sectors of the market, different companies, then you reduce your risk of losing a lot of money. If you would like to get into investing, but you're like, I don't even know how this investing thing works, I don't know how to get into it. 2024, I mean, it's so easy to do it. I've already mentioned a few very easy strategies to go with. But if you want, how do I do this on my own? What is the basics? How do I get started? Where do you go? Then go ahead and watch this video where I break down how easy it is to get started and how to get your money into the market. All right. Thank you so much for watching. I will see you in the next video. Bye.